U.S. stocks finished broadly lower on Tuesday as dismal quarterly earnings from several big companies disappointed investors. McDonald's stocks fell 2.5% after the firm posted a quarterly profit that missed analyst expectations, while the overall revenue dropped 30%. 3M shares lost nearly 5% as its quarterly earnings and revenue were lower than expected. Meanwhile, fiscal stimulus debate continued. GOP and Democrats divided on issues including unemployment insurance, aid for state and local governments, and assistance for renters and homeowners. The persisting uncertainty on this front added to a cautious tone in the markets. As a result, the Dow Jones Industrial closed 0.8% lower, the Nasdaq Composite dropped 1.3%, and the S&P 500 dipped 0.6%. Stocks in Asia were mixed on Wednesday as investor focus was on the rate decision by the Fed. The S&P ASX 200 in Australia dipped 0.23% after the official report showed that the consumer price index fell 1.9% in the second quarter, while annual inflation rate was negative 0.3%. On the corporate front, shares of Japanese automaker Nissan Motors plunged nearly 11% after the company forecast a 470 billion yen loss for the fiscal year 2020. Meanwhile, Canon stocks plummeted nearly 13.5% as the Japanese company reported its first ever quarterly loss. The Nikkei in Japan was down 1.15% after Fitch Ratings revised its outlook for Japan's credit rating from stable to negative, citing a sharp economic contraction triggered by the pandemic. Overall, the MSCI Asia ex-Japan index rose 0.13%. In Europe, stocks mostly edged closer as the sentiment remained cautious amid the continued worries about the rapid spread of the COVID-19. Of note, several U.S. states in the south and west reported their biggest one-day increase in coronavirus deaths, while mainland China reported 101 new cases. The Pan-European Stock 600 edged down 0.06%, the UK's FTSE 100 climbed 0.04%, and France's CAC 40 gained 0.6%, while Germany's DAX ended lower by 0.1%. In the UK, Barclays stocks fell over 6% after reporting a more than 50% drop in pre-tax profit in the first half of the year. The bank giant also warned that the second half will also be tough. On the data front, Germany's import prices declined 5.1% year-on-year in June, following May's 7% decrease. This was the slowest fall since February. On a monthly basis, import price inflation doubled to 0.6% from 0.3%. The consumer sentiment in France fell to 94 in July from 96 in June, while the number of mortgages approved in the UK last month rose to a 3-month high of 40,000 in June from a record low of 9,300 in May. Meanwhile, the Federal Reserve held interest rates steady, as expected, and reiterated that it would do whatever it takes to support the U.S. economic recovery from the pandemic recession. As a reminder, a day earlier, the central bank said it would extend its emergency lending programs through the end of the year. Also, Powell noted that the households and the jobs market have slightly improved since May. U.S. stocks rose Wednesday after the Federal Reserve signaled it will continue to provide stimulus to the economy. The Dow Jones Industrial Average ended 0.6% higher, the S&P 500 added 1.2%, and the Nasdaq Composite climbed 1.4%. In currencies, the dollar came under an even more severe selling pressure following the Fed's dovish remarks. Against this backdrop, the euro-US dollar extended the rally to fresh 2-year highs around the 1.18 handle and finished marginally below this level. The euro is yet to confirm the latest breakout, however, as profit-taking could trigger a bearish correction in the near term. The pound sterling US dollar exceeded the 1.30 barrier for the first time since March, also due to broad-based dollar weakness. The US dollar Japanese yen dipped to mid-March lows around 104.75 and finished below the 105.00 figure, which was another bearish sign for the pair. Elsewhere, gold prices maintained the upward bias, clinging to record highs around $1,980 per ounce. Now, as the precious metal continues to attract demand amid global uncertainty and economic concerns, the bullion may well challenge the 2,000 ounce per barrel barrier if the risk-averse tone continues to prevail in the global financial markets in the days to come. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.